Hey guys, welcome back to my channel. In this video, we're going to be continuing on from last week. So we're going to be doing the next week of Euro USD in January. So I'm thinking of switching from more so weekly videos and recording a week of me backtesting to monthly videos. So I just cut out the dead days that don't take a trade or there's no valuable information, and then just showing you guys the trade, because I feel like that would be, more helpful to you guys. But you guys let me know what you think. So if the last video was any help or you have any questions, please let me know down below. And if you have any places where I can improve, let me know. Someone asked me also if I could drop a more in-depth explanation of my strategy. And I'm thinking of dropping a PDF with all the nooks and crannies and inside outs of my strategy. So if you guys would like to see that, please comment down below, let me know, so I don't just waste my time making it, for it not to be helpful for anyone. But yeah, without wasting any time, let's get into the video. Okay guys, so taking off from where we left last week, we left it on I think a Thursday. There were no trades there, but I also seen a trade I missed also on the 5-minute. On the M15, it didn't look too clean, so I didn't spot the trade. However, on the M5, this sell was also available that I missed. And if you go through my criteria in order of other videos or my previous backtesting video, then you'll see that this order block technically was valid for a sell, but maybe I just wasn't looking for it at that time. But anyways, going on to the next day, it's a Thursday right now. I don't trade Friday, so I'm just gonna skip over that Friday. And it's not because I'm not profitable on Friday. It's just that I figured out that Friday is my least profitable day, and I see a lot of manipulation in the market on Friday, so I just don't really want to be a part of the market on Friday. But if you choose to trade on Fridays, then that's fine with me. It still works. But yeah, I'm just gonna skip over this Friday. Okay, so starting off on Monday, we start from where we always start on the daily. Try to get our bias for the day or our narrative for the day. So if you look, technically speaking, we've already swept the previous day's high. So which means coming into this day, there's no bias really. But sometimes to tell if we're going to continue with the bias or the daily bias or we're going to reverse, the H4 usually gives us all that information. So that's what I'm going to be checking next. But right now, looking at this chart, the first thing that my mind draws to is these highs here, because I don't really think there's anything stopping price from reaching these highs, but I do also notice that there is an order block here on the daily time frame. However, if it's going to hold or not, we'll find out. But you don't really want to have a fixed mindset of what you expect in the market. You need to be open to different situations playing out. So I'm obviously eyeing up this sell from down here, from this order block, but I'm also seeing price burst through it at the same time. So whichever comes first, I'm just going to trade. You don't want to try and predict the market. You just want to take what the market gives you. So yeah, let's play it on and see. So on a daily, not really a lot's going on. This fair value gap isn't valid yet because this candle hasn't closed. We're still printing. So onto the 4 hour, what do we see? On the 4 hour, it's still going with my original bias of price taking these highs. That's what I'd like to really see. It doesn't really show us a lot. There's this fair value gap here. So if I want price to take out those highs, fair value gap, this was that daily order block. So I could be looking for something like this on the day. Sweep back into this fair value gap and then maybe see a move higher. Or we could see price burst through and just continue down. But like I said, we're not here to guess. We wait and see. So on the H4, I noticed that these highs have been swept. So that could be a very, very, important point of reversal. And although I am bullish long term, I could take a sell down to this fair value gap and close out my trade in this fair value gap before looking long. That's also very viable and very valid. So, the H4 doesn't really tell us too much. The H1, however, the H1 gives me a nice close. If I can see price push up into a PD array or an interesting area and then give me a sell down to this fair value gap, I'll be more than happy to take it. Or if I just see price push into this fair value gap, I'll wait for buy opportunities. And then you also check for news. Nothing really nothing serious is happening, but yeah. So on the M15, my session hasn't started, just started at 8. I would like to see, price just, didn't respect that going down. On the hourly, I do expect this candle to print downwards. So we're going to see. Nothing's really happening as of right now. Okay, cool. So this technically is my setup, and it doesn't look like the traditional setups I'll show you, but I'm pretty sure if I drop down to the 5 minute, it'll look a lot clearer. But we've had a liquidity sweep, and sometimes the order block itself doesn't have to sweep liquidity. The candle beside it can sweep liquidity. And the reason this is allowed is because on the M5, what you're going to see is that these are that's just the order block technically. So these series of up close candles are the order block, but the order block I enter from specifically is always going to be the highest or the lowest order block. So it'll be this one all the way at the top because it's the highest, and we are looking for sells. So it will be just here, stops just above the high, targeting maybe like a 1 to 3 in this fair value gap. Now, I've not really, gone to confirm and see if all 5 stuff are valid, but I'm just going to do that now quickly. So you could either take this trade from the M15 or the M5, either one works. I'm going to take it from the M5 just because it looks cleaner. So we have the liquidity sweep, that's one. The breaker structure or chalk of this low, that's the chalk. That's 2. We have a fair value gap in the move that displaced or caused the chalk. That's 3. So this is the fair value gap right here. Hopefully I get to a point where I don't have to mark up all of these stuff, but I'm just going to do it for the sake of the video. So that's 3. For the 4th one, we have it's unmitigated. So price has not pushed into it after it formed. That's the 4th one. And the last one is that there's no fair value gap above our stop loss. So zooming out, you always want to check and be sure, because sometimes there's a fair value gap all the way back here. You just didn't spot it. So just to be sure, yep, this trade is technically valid. So in terms of stop loss placement, I always put my stop loss above the order block high. So always be above this high. Let's say it was a sell, always be below the low. Because I know some people like to cover previous highs and lows, but I only care about the order block high and low. Because once this high or low has been violated, the order block is no longer valid. So you don't really want to be in a trade or be looking for a trade once it's been violated. But yeah, I'm just going to place the order and wait and see. Sorry. So 1 to 3, yep, everything is alright. And we play forward. Now, if price gets to this fair value gap before it gets to my entry, I am no longer looking for the sells, because like I said at the beginning of the video, I'm looking for price to push down, react off this fair value gap and push up. So if price has already reached this fair value gap, why do you want to still be in the trade? It's no longer valid for you. So yeah, let's play forward and see what it does. Okay, it's reached that fair value gap. I'm no longer interested in the trade. It's just as simple as that. So, we go on to the next day. No, actually, let's wait and see. Let's wait and see what price actually does in this fair value gap. If it gives me a nice clean entry, I'm more than happy to take it for a buy. But other than that, there's nothing else I'm really eyeing up. So we are reacting in this area. Now, I trade on the M5 and the M15, but if you drop down to the M1 or something off this fair value gap and you could find an entry, that's fine. I just really don't like the M1 or the M3 or even the M5 I don't like, but it's showing me that it's worth trading, so I have no reason not to trade it. But as of this fair value gap, it's looking like we're seeing a nice reaction off of it, so what I could do is just wait and see if we get an entry. What time is it? I stopped trading by 1 o'clock, so there's still a bit of time. Okay, that's a nice reaction. I'm pretty sure if you drop down on time frames, you could have probably found an entry around here on the M1. On the M5 it doesn't look too clean, but maybe on the M1. Okay, let's play forward and let's see. On the M15 is the entry there. This looks like a flip zone, but dropping down to the M5, I do see a liquidity sweep. So this will be technically a flip zone actually. So do we have a breaker structure of the highs? We do. Do we have the okay, cool. So this is looking like a nice setup. So we have a liquidity sweep. We swept this internal liquidity. That's one. We had a breaker structure. So with the flip zones, you only go down to the 5 minute to check if there's a liquidity sweep. But once you see that liquidity sweep has formed, always go back to the M15 and take your entry off the M15. So we had the liquidity sweep from the M5. We have a breaker structure from the M15 high. So that's breaker structure. That's 2. We have a fair value gap in the move that formed this breaker structure. That is 3. We have no fair value gap below our stop loss. That's 4, and it's unmitigated. That's all 5 confluences. So it is a valid trade to take. Also, we do have this H4. Was it H4? Yes, we have that H4 fair value gap back in our analysis, which makes it, more valid, or gives us, this will be technically a higher confluence trade. But let me see and make sure I've not missed anything. Yeah, cool. This is more than valid for me to take off this flip zone. For the sake of this entry, I'm not going to do anything, too extreme. I'm going to place my stops below the low entry just above the high of the candle, and aiming for, where's a reasonable place to aim at? This is the highest probability area of price hitting, this high up here, which is at 1 to 3. But if you really wanted to aim for these, if it was a daily of H4 swing highs, you could also aim for that. That is a valid aim. But yeah, I'm just going to take the trade and play out. You know, if we lose, it's not the end of the world. You go back, you take a better trade, or another trade rather. Wait, I didn't mean revenge trade though. Don't go back and revenge trade. Come back another day with a fresher mind and still trade the same setup. So let's see what happens. Oh, how dare you, price. Oh no. It's just about missed me. And this does happen. No matter what strategy, like I said last video, you are going to get missed. This is very, very unfortunate that I didn't get tagged in. But like always, if price goes to your take profit before it hits your entry, you leave it. You could drop down to the M5 and maybe try find another scaling or another entry along this move up if you get missed on the original entry. But for the sake of this video, I'm not going to make it too complicated. I want you guys to get a base strategy down. So yeah, it's looking like this is probably going to be a missed trade. Yeah. But as you can see, the analysis was right. That's why it's good to have, you know, like a fluid mindset when you're looking for your analysis. I showed you both the buy and sell opportunity in this day. And, you know, it's like they say, failure to plan is planning to fail. I had an idea of what I'd do once price touched that fair value gap, and which was this buy that unfortunately didn't tag us in. And I also had an idea for the sell all the way to this fair value gap. So those are two trade, you know, ideas off just, you know, one move or one PD array. Now, unfortunately, I didn't get tagged, and it's so dumb because I never, you know, really not get tagged. But, you know, as I'm showing these videos, unfortunately, I'm not getting tagged. So, yeah. Also, sorry, one thing I forgot to say is that when you're usually entering off order blocks and stuff in a live market, you want to at least make your entry a bit higher or a bit lower than when you'd actually enter just because of spread. So you actually get tagged in, because if you keep it exactly on the top of the order blocks that you're going to tend to see as your backtesting are very, very precise. Like price will touch it to the pip and then reverse. So you kind of want to put your entry above the order block or below the order block, depending on whether you're buying or selling, just to make sure you get tagged in. But yeah, I'm not going to waste any more time on this trade. You know, we didn't get tagged in, it's unfortunate. I'm going to delete this order block now on the H4. Was it a daily order block? Okay, we haven't violated the daily order block yet, but I don't think it's going to hold, so I'm just going to delete it for now. Okay, let me see if there's any other chance to, you know, re-enter. My session ended at 1 o'clock. I don't know why it's 12, but okay, we have until 1. So has any other setup formed? Is this a flip zone here? 12:45. Go to the M5. Okay, that's a nice flip zone, potentially. So, okay, cool. This is a valid flip zone. This order block right here. But with flip zones, you have to be very, very careful. If price taps into a, you know, big PD area, let's just say this was a daily fair value gap before coming back into our flip zone, you don't want to take that trade because price has already delivered to a premium area. So the flip zone is no longer of higher probability. But let's just say we missed our entry down here, and then just up here there was another entry before we took this high. Then it's, you know, it's a better flip zone trade to take. So yeah, let's just go through this trade. So we have our liquidity sweep of these internal lows. You just need any low to be swept, really and truly. So that's liquidity sweep. We had a break of structure of these highs. Break of structure. That's 2 of them already. We have a fair value gap. It's very, very small, but I have an indicator to show me. But I can't spot them, but I just have the indicator for ease. That's a fair value gap as well. It doesn't matter about the size of the fair value gap. That's 3. There's no fair value gap near our stop loss. That's 4. And it's unmitigated. That's all 5. So realistically, I can take this trade from this order block right here. Stops just below the low. Give it a bit of space because of spread. And then aiming for a reasonable target, which unfortunately would have to be this high. Now, I do only take 1 to 3s minimum, which means in a trade like this, if 1 to 2s do work, so if you're, you know, someone who likes 1 to 2s, you want a higher win rate, or 1 to 2 will work, but 1 to 3 at minimum, you know, I see the best results at the best, like, you know, distribution or probability for my strategy. So if you got to this situation where the most reasonable take profit is a 1 to 2.1, you can do one of two things. When price gets to this 2.11, you know, you could move your stops to break even and let it rock, or see if you can make it to the 1 to 3, or you could just take your profit. You know, you can never have a bad day with profit. But for the sake of this example, I'm going to take this trade and let it go for 1 to 3. Let me see if there's anything relevant at 1 to 3. No. So let's just say because our 1 to 3 is floating in the middle of the sky, there's no PD arrays or anything, you can't really and truly stretch your take profit all the way here. But for the sake of this video, I'm just going to go for the 1 to 3. And let's play it out and see if I actually get tagged in. If price goes to this, H4 high before coming to my entry, I'm no longer interested because there's no longer higher probability. But yeah, let's play this forward and let's see. Oh, price just unfortunately left us and swept straight for that high. Why am I being missed out on a lot of trades now that I'm trying to show you guys examples? But that's how it is in the real market. And I want you guys to really take something away from this, that, in the real market, you're not going to get your trades tagged in every single day, every single trade you place. And you have to take it as a gift. A day where you don't trade is a day where you don't lose. A day where you don't lose is a win in itself. So just because you don't get tagged in, don't see it at the end of the world. There's going to be some times in a month you're not going to get tagged in, every single trade you take, or at least majority of the trades you take. And then the next month, every single trade you take is going to hit. And then the next month after that, you're going to take the exact same setup you took the month before, but every trade is going to lose. Like, the distributions are really, unstable. So you just have to get used to it and not let the market conditions sway your analysis or your emotions. But yeah, unfortunately, we got missed out on this trade again. But yeah, let's go on to the next one. That's really it for this day. I'm not really looking for anything more. If you're someone who wants to trade both sessions, you can trade both sessions. My strategy works on both sessions, but I only trade London session because that's the time frame that matches my lifestyle. But yeah, that's really it for this day. On to the next day. As you can see, the daily analysis did play out, but yeah, I removed everything. So start off your day looking at news. Make sure you're not going to take anything stupid. Start off on the daily again. It's the same thing, rinse and repeat. Now, if you watch the ICT daily bias video by T Trades, you'd think we are bullish for this day. However, there's also something you need to realize, that price swept on the daily these highs, the swing high, and failed to close above it, which means we could also potentially maybe see a sell. Now, to determine which one we're most likely going to see, like I call it the contextual time frame, the H4 is going to give us the answer always. So from the daily, I'm also open to both ideas, both the buy and the sell, but the 4 hours is going to give me a stronger indication of which side we're most likely going to see. So I'm just going to mark that as previous day's high and previous day's low. On the H4, good indication of whether we're going to continue or reverse is how price closed around the high or the low. So on this H4 high, I'm going to call it H4. On this H4 high, price closed above it with a strong body close, which is a very good and strong indication that we're going to continue bullish, at least a previous day side. Now, if we wick this H4 high, that was a very strong indication that we're going to reverse and maybe see some downside. But yeah, we closed above it. So I'm going to delete this line. We closed above it. So I'm going to continue bullish just because the H4 is showing me no signs of reversal. Now, if I want to be bullish, an idea I'm going to have in my head is that we could see sells into this fair value gap, just exactly like the last day, rinse and repeat, and then maybe see a buy. Now, if we buy and go straight to these highs, it's also still valid to look for a buy straight away. Price doesn't have to come into this fair value gap, but this will just be a higher confluence trade or a higher confirmation trade if we come into this, because we have a higher time frame back in our M5 or M15 entry. So yeah, that's just something I'm looking at. We could also see price do something like this, sweep up to these highs, and then burst down. But like I said, always be dynamic in your thinking. The H4, all I really, was really relevant to where price is right now is this fair value gap, and then price closing above the H4 high. On the hourly, usually matches the H4, nothing a lot. But also, one thing you're going to tend to see is that on the H4, there's going to be a fair value gap. On the H1, there's also going to be a fair value gap in the H4 fair value gap. Now, if you want to decide or determine where in the H4 fair value gap we're going to go, always look for where the H4 and the H1 fair value gap overlap. In this situation, they both overlap in this area. But sometimes you're going to see the H4 fair value gap will be this big, but then the H1 fair value gap will be this big. And what you're going to tend to see is that price will disrespect all of this area until it comes into this area, and then we'll see a move off for it. I'm not sure if there's a term for this because I don't watch all of ICT's videos, I don't watch all of the stuff, and I'm not really tuned in with all the social media trading. But if there's a term for it, please let me know. But that's just something I've noticed. So Going into the day, we're just gonna play it forward. My session starts at 8. There is news 10:30. So if you want to wait till 10 to trade, that's also fine. But like I said, for the sake of this video, I'm just gonna play it forward. I would like to see price sweep Asian low at least before we see the upside, or come into this fair value gap before we see some upside. Let's see what happens. News is drawing closer, so I'm just gonna play past news. 1, 2. Okay, not a lot happened during news. You see, this price action is flimsy. Don't trade this, please, guys. Don't trade this. This is not, high probability trading conditions. You don't want to trade this. So just keep playing it forward. If you don't get a trade that day, that's unfortunate. Just don't trade. It's better to, not trade and save your money. At the end of the day, the goal of trading is capital preservation. You want to save money. You'd rather not lose any money than make money. So yeah, let's say, okay, cool. Looks like price is pushing. What time is it? Price is pushing into this fair value gap at 12:30. If we can see a nice reaction, for those who trade London session or New York session, you could probably find an entry somewhere down the line, but I don't trade New York session. So for me, technically, this will be my day done. But I'm just gonna play it forward and show you guys what happens. This looks like a nice order block, to be honest, but there's a big fat fair value gap below it, so it's a lower probability order block. I'm just gonna play it forward. Let's see what happens. Okay, cool. It was a flat day, and see, just by identifying that the market conditions are sideways and it's not the most probable trading day or trading conditions, you saved yourself a loss by trying to enter either a buy or sell in these conditions. Now I'm just gonna go to the next day because that's really all. Yet again, we start from the daily, like always, guys. Now on this day, as you can see, price failed to close below the previous day's low or above it. So this is also another day with no bias. And we're going to tend to see on days like this, price is going to go sideways the majority of that day. So on this day, we're expecting price to most likely be sideways. You could see a burst, especially if there's news. But, I'm expecting price to be sideways. So I'm going to make this previous day's high, PDH and PDL. But like I always say, the H4, your contextual time frame, will always give context to what you're looking for in the daily. So let's drop down to H4, see if there's anything. Look, on the H4, completely sideways. If you can't tell what your daily bias is going to be, can't tell what your H4 bias is going to be, your H1, let's see what H1 is saying. Completely and utterly ugly. You don't want to trade on a day like this. I'm going to go through the price action, but no matter how the market looks or how appealing it looks, I'm not going to take a trade on this day. Any trade taken in these conditions is low probability. Now there are going to be some days I've seen myself. Sorry guys, I keep rubbing my nose because I got cold. There are going to be some days you see yourself where in conditions like this you can find a trade that just happens to work out, but it is not repeatable. They are not repeatable results. They're not more conditions you want to trade in constantly. You're going to lose more times than you are going to win. But yeah, that's really it. From the H4, I can't tell what's going on. I can't tell if we're going up or down. The daily, I can't tell if we're going up or down. Hourly, I can't tell if we're going up and down. I'm not going to enter on the M5 or the M15 if the higher time frames aren't clear. So, like I said, we're going to drop down, just play it forward. I'm not looking for any trades. Okay, cool. It was a flat day. If you trade New York session and, you wait for all of this move to happen, then, that's also fine. But for the people who trade London like me, also, if you trade New York session, I also forgot to say, apply the strategy exactly the same. I have backtested New York session. It worked exactly the same. I just don't, have the time to trade both London and New York. And London was more profitable for me, so I just decided to choose London. So yeah, like I said, we were not going to trade this day anyways. Go to the next day. Look, even though we did move up, unless you happen to catch this order block down here, this will be for the New York people. This was the only possible, good trade because price has already burst down up, showing us that there's, bullish momentum in the market and you could have waited for this pullback for your longs. So without wasting time, it's Thursday again, like we always do stuff on the daily. And you guys are going to see this is more so a system. You do the same thing almost every day. And that's what I love about it because it's repeatable, it's easy, it takes away a lot of the emotions in trading because you're just repeating your system. In this case, this candle previous day failed to close above the previous day candle. So it swept above this candle. So Wednesday the 11th swept above the previous day's candle, but failed to close above, which, is a good indication that we could see some bearish momentum in this day. If you don't understand what I'm talking about, go watch the daily bias video. It explains a lot of this. So yeah, on this day, I am, more inclined to take sells. As you can see, we also swept this previous high. I'm not going to mark it up because it's not as relevant as what I just said, but yeah, so we are expecting sells. So when you're expecting a bearish day, what you're going to tend to see is price is going to push up at the beginning of the day, clear some liquidity or form your setup, then push down and close the day low. And I'm pretty called open high, low close or something like that. But yeah, that's just something I'll be looking for. So on the H4, anything here for us? No, not really. H4 is still unclear. It just shows us we swept these highs. The H1, H1 is not really showing a lot as well. I am so bearish, but the H1 and the H4 are really giving me a lot of confirmation. I would love to have seen maybe a fair value gap here that price can push up into before we see a sweep. But as the market's giving us nothing, okay, as the market is not giving us that much on the higher time frames, we could just drop down to our entry time frame and see from there. So an idea I'd have in my head is that price could push up to sweep Asia's high before we see, a push down. So we could see something like this. So me saying that is just showing you guys that there's two ways you can go about this day. You can try and look for a buy in and around here to Asia's high and call it your day. That's your trade for the day. Or you can wait for price to sweep this high. And this is going to be more so for like the people who trade later on, like the New York session. Wait for price to sweep this high and then try and find your entry going with the daily bias for a sell. So I'm going to take whichever one comes first, just for the sake of this video. And yeah, we'll see. Now, this is an order block right here. However, I like to take order blocks that only form in my session. So if you want to, play around with Asian sessions order blocks, go back yourself and backtest order blocks that form in Asian session and see if they work. I know they do work to a certain degree, but it's just a lot harder to, master. So yeah, I only take order blocks that form in my trading window, which is between 8 a.m. and 1 p.m. UK time. So yeah, I'm going to play this forward. Okay. So just by the way, okay, there's CPI, so I do have to be careful around 130. Just by the way price formed, it's looking like the most reasonable, if you want to get a trade in today, would be to take the buy to Asian's high, which is a 1 to 2. Now, honestly, I'm not too sure. Okay, we do gotta have a lot of time before news. I'm gonna give it one more candle actually. Okay. Now price has rejected that Asian sessions order block. What's the hourly looking like? The H4. Okay. I am not against taking this buy to this high. However, because this is a 1 to 2, I'm gonna bring in my fib levels. I don't like the risk to reward, so I measure out the size of the order block. The order block will be this black candle, but okay, the back candle is swap liquidity, so that's not that relevant. But if you want a cleaner entry, drop down to the M5. You could enter off this order block here, or you could draw out the whole move and then enter on the 0.5 of that. Those are like the different entry types. If I was entering from an M5, I'm entering from this candle, but because I'm entering from the M15, I'm entering from the top of this candle. So I'm gonna draw out my order block. It is 8 pips. Bring out my fib levels. On an 8 pip candle, we enter from the 0.5. So the golden line, by the way, is the 0.5. That's the 0.25. So if you hear me reference them in the future, just know those are the lines I'm talking about. I'm gonna delete this, adjust my stop loss, and see if we can get a 1 to 3. Okay, so let's go through the criteria. Liquidity sweep, check. Fair value gap in the move that broke structure, check. Break of structure is gonna be this high. This is the most recent chalk. You can call it chalk, break of structure, whatever you call it, as long as you understand what I'm talking about. That's 3. Unmitigated, that's 4. And no fair value gap, no stop loss, that's 5. So it is a valid trade. We place the order. I can't lie, but the way this trade is looking, I will be very, very surprised if I get tagged in. It's basically already at my TP, but I'm going to play forward. Price is really playing with me. You are taking the piss. It came to the top and rejected off. Okay, I have to be very careful because news is at 1:30 and it's currently... there's a bit of time. Now, although I still like the idea of this trade, there's only an hour between news and where price is right now. That's 4 candles. The chances of price tagging me in and hitting my take profit in 4 candles is unlikely. So I'm going to delete this entry because obviously I don't want to trade before news. But yeah, let's play forward and see what news does. Oh yeah. So price did deliver to my take profit, but unfortunately, yet again, we weren't tagged in. Now, if you had decided to leave your entry at the top of the order block, you would have been tagged in and you could have been tagged out for a 1 to 2, which is nice. Or even if you stretched it, now that I look at it, it would have been a 1 to 3. But, you know, the fib levels do work for me. January, unfortunately, is just not showing that. But in the other months, as we're backtesting, you're going to see this, you know, strategy play out across the hundreds of trades. And you're going to see that I do get tagged into my setup. It's just unfortunate right now. So, yeah. If you decided to enter from the top of the order block, you would have won this trade. I didn't. I would have preferred the 0.5 for a cleaner entry. And as you can see, once price swept this Asian sessions high, what did we do? We had that dump we were anticipating. So you're going to tend to see when you analyze the market like this, news does tend to go in your favor, except for FOMC. FOMC is just like a naughty child. It doesn't listen to anybody. But yeah, again, unfortunately, this week there were no entries because we didn't get tagged in. But in the next week, I do remember from this backtesting, there is going to be 2 or 3 trades. So just know there will be actual entries. But as you guys can see, like, the strategy works. It will work. Like, the analysis is good, everything is good, but unfortunately we're just not getting tagged in. But that's always going to happen. But yeah, that's really it for the video. Thank you guys for watching. If you have any, you know, advice you'd like to see, or want to send me pictures of your backtesting results, please make sure to send them to my IG. I think that'll be the best place to contact me. So yeah, thank you guys for watching, and peace.